Hey everybody, welcome to Disruptive Investing. I'm so lucky to have with me today Mark Jarvis, who's the CEO of Giga Metals. And we were fortunate enough to have Mark join us about a year ago with our investor club. And it was so interesting. I wanted to bring him back and have you kind of explain to the wider audience more about what's going on at Giga Metals. So first of all, thank you for joining us today.
Well, thanks, Zach. It's just great to be here.
I have lots of dumb questions about mining. Hopefully you can help me. Giga Metals is what we typically call in the investor world like a junior mine. And that, I don't really even understand why we call it that, because you haven't really brought any metals out of the ground yet to speak of. So can you explain to me where you're at in terms of a mining company?
Yeah. No, we're not actually miners. We are developers at this point. So we have a very large deposit that could be a mine, we think. It's about 1 billion tons of rock containing nickel and cobalt in the measured and indicated category, plus another 1 billion tons in the inferred category. And these categories just really are dependent on drilling density. Like we've drilled, 400 holes into this deposit. So it's a monstrously big deposit. It's going to cost to actually make it a mine. It's going to cost about $2 billion. So it just gives you an idea of the scale of the thing. And it also gives you an idea of the challenge that we face as a small company. Where do we come up with $2 billion?
Yeah, that's a really good question. Let's start there. So you mentioned when we were talking before something called the Lasan Curve. Can you explain what that is?
Well, in the mining exploration development business, the exciting part is when you actually make a discovery. It's you're looking around, you get the drills turning on a geologist's idea, and most of the time you don't hit anything. Once in a while you hit something and it's really exciting and the stock takes off and you're the talk of the town, everybody cares, and then you drill more holes and more holes and more holes to actually define in three-dimensional space a deposit. And now you're in the development phase, and it's a little more boring, frankly. I mean, it's just from a speculative investor's perspective, it just becomes this long grind, and the stock tends to trade lower. And then there comes something in the development phase where you're suddenly going, oh my God, this one could make it. This one could actually become a mine. Some event will happen where the odds of actually getting the thing built go way up. And that's what's recently happened with us.
Okay, so what have you found exactly, and why is it so exciting?
What have we found? Well, we found a deposit of nickel and cobalt and sulfides that we drilled off, did engineering on, and we've got a model of a mine where we could produce on average around 35,000 tons per year of nickel in a concentrate that's 18 parts nickel, 1 part cobalt. And we can produce that amount for 37 years. And that's on just what we've drilled off. The deposits, as they say, open. If you keep drilling, it looks like there's more there, but we haven't drilled off more. But we think we've drilled off 20 to 25% of what's prospective. So it's truly a giant deposit. I mean, 35,000 tons a year is a lot of nickel.
So Mark, tell us where your mine is located, and also tell us, I know that in Canada, you have to make sure that the Indigenous peoples who are near the mining location are happy with the project. Can you tell us about the location and what the challenges are making sure that everyone is happy?
Okay, well, the Turnagain project is located in north central British Columbia, and it's a mining-friendly province in general. The two First Nations that we deal with are the Tahltan and the Cascadena. The Tahltan, their traditional territory controls access to our project. And fortunately, the Tahltan are very business friendly. They are doing extremely well out of the mining business. They've figured out how to work with mining companies to ensure that they get a lot of benefits out of development. The Cascadena are downstream. The Turnagain River flows up to the Arctic. And so the Cascadena are downstream of us, and they're legitimate players for that reason and for other reasons. And the Cascadena are also starting to do quite well out of the mining business. They're figuring it out. And it's interesting. I mean, you talk to some of the elders, with the Tahltan and with the Casca. There's always some that hate mining, don't want it, at all. But most of the elders want economic development in their territories, so the young people don't move away to chase opportunities. So, the mining business, the jobs are really well paid. They're steady. In our case, it's going to be a multi-generational mine. And, in the wintertime, you can go take a vacation in Hawaii. You're making that kind of money.
Now, I love that Mark Twain quote that you gave us last time. What was it?
A mine is a hole in the ground with a liar standing in front of it.
Okay, so how do we know that you're not just a guy standing in front of a hole in the ground telling us something that isn't true? How do we know that you found what you found?
Well, we've got engineering by Hatch, which is a large, international reputable engineering firm. And we've got some validation, which is we've recently announced that we're doing a joint venture with Mitsubishi Corp. And Mitsubishi's putting $8 million in to help take the project to the next stage, which is more detailed engineering called pre-feasibility. So Mitsubishi is the largest commodities trading company in Japan. And they have a model where they like to own a minority interest in a producing mine. And they've got minority interests in producing mines all over the world. They're partners with big companies like Glencore, Rio Tinto, Teck, and they've got in-house mining expertise. So in order to select us as their first nickel play in decades, that they've been through a due diligence process. They've compared projects around the world, and they've decided on us, both for technical reasons, but also for environmental, and social reasons.
Now, I got all excited when you talked about nickel. In fact, Elon talked about it at Battery Day, why it's such an important thing. But for our viewers watching now who are like, Zach, I don't even know why you're talking about nickel. You're an EV guy. So what does this have to do with what you normally do? Can you explain to those viewers why nickel is an important material?
In the lithium-ion battery, nickel is the part of the cathode that holds the electrons. It's got what they call excellent energy density. And so it's all about range. Nickel is about range. If you want to increase the range of your electric vehicle, you want a higher percentage of nickel in your cathode chemistry. And that's where the really big battery companies are spending huge amounts of money researching how they can get a higher percentage of nickel without the battery becoming unstable. It's not a trivial problem, but they are working on it. They continually make improvements. And we're right now at an 8-1-1 formulation, which is 8 parts nickel, 1 part cobalt, and 1 part manganese. And they're working on, even higher, amounts of nickel. Now you can have an electric vehicle battery without nickel. There's a type of battery called LFP, so lithium iron phosphate. But they are heavier. It's a good technology. It works well for certain applications. But they are heavier and less energy dense. So you will never get the range that you get with a nickel-based chemistry with LFP.
That's really interesting because I think a lot of people were scared when they heard about LFP coming out that like, oh, well, that means that that's the end of nickel. We found some new technology. But as you mentioned, it's a lower energy density. It's really not the perfect choice. It's just an okay choice because it's a more common material, iron.
And the way I look at it is thank heavens for LFP, or there couldn't be an electric revolution. It's suitable for things like, sort of cheap commuter cars where you're just going from the outskirts of the city to downtown to back again, but you'd never take it on a road trip. It's good for buses where you recharge at either end. You're able to recharge constantly. It's got a lot of very valid uses, but particularly for North America, where people like to get in their car and go for a drive and go out in the countryside and, maybe go to a park or something like that, you want range. And so for range, you need nickel. The thing about LFP, which is so good as far as we're concerned, is that you cannot bring enough nickel on stream quickly enough to deal with the demand for electric vehicles. It just can't be done. And so we're running into supply constraints, and we're running into them today.
Now, I just saw J.B. Straubel, one of the founders of Tesla, give a talk, and he's just started a company called Redwood Materials. They're a recycling company. They're going to recycle batteries. And he was saying that, yeah, we need as much mined material as we can for like the next 10 years. But then at some point, he's hoping that we can just use recycled materials. And should that worry me as an investor in Giga Metals and other companies that mine materials? Because then maybe we won't need mines anymore.
I don't think we're ever going to get to the point that we don't need mines. I mean, recycling will become an ever more important part of the supply chain, just as it has with stainless steel. But the technology to break down a battery and extract the useful components is also not trivial. And there's a lot of startups that are working on this right now. And I don't think there's anybody that's really totally there yet. So there's technical issues with it, and there's also then economic issues with it. Like, how much does it cost you to break down a battery? It's not as simple as just throwing some stainless steel in a furnace and melting it. You've got so many different elements in a battery. I think it's going to get there. I would bet that it's going to get there, but it's not going to ever replace fresh input from mines, just as it hasn't in stainless steel.
Now, right now, supply chains for these materials, especially nickel, mean that we're getting a lot of these materials from very far away. Indonesia, China, Australia, Russia. Why haven't Western companies and countries kept up? Is it because of environmental regulations? Is it because we just don't happen to have these deposits?
I think you hit it on the head the first time, Zach. It's the environmental challenges. I mean, if you look at the large undeveloped deposits of nickel, they're all over the world. And there are, two main types: sulfide deposits like we've got, and then there's lateritic deposits, which are basically nickel in dirt and clay. And in Canada, where we sit, you've got to go through an environmental assessment process that's, a solid 3-year process. In our case, it could cost $10 million just for the environmental piece. Whereas in Indonesia, you don't have those kind of challenges. And so you've got this bifurcation of production from jurisdictions that really do not have high environmental standards, and jurisdictions that do. And if you put our deposit beside a typical, what they call HPEL deposit in Indonesia, and you say, okay, we're going to start building them both now. What do the economics look like? Our economics are better. And the environmental impact is much, much less. I mean, in Indonesia, to get at the nickel, there's strip mines, and you're actually mowing down, in many cases, you're mowing down tropical rainforests with incredible biodiversity. You're just mowing it down mile after mile. You're then processing the dirt very aggressively with sulfuric acid. And then in many cases, in most cases, in fact, you're dumping your tailings into the ocean. What's happening there? So it's ironic to me that the thought that by buying an electric vehicle, I'm saving the planet. That notion is, if you look at where the materials come from and the environmental destruction that's being done in places like Papua New Guinea and Indonesia, you're not saving the planet, you're destroying species. Who knows what you're doing in the ocean, all in the name of, lower carbon. In our case, and this is a big part of why Mitsubishi chose us. Mitsubishi, giant Japanese company, they really do have a corporate vision of trying to do good in the world. And they're not interested in mowing down tropical rainforests. They're interested in getting nickel. And so they're taking us on, even though we're more challenging to get a permit for, because the flip side of this is that if you buy nickel from a Canadian deposit, you can feel good about the environmental impacts of it, because they've been studied to death. and the environmental impacts are relatively low. You can never have a zero impact mine, of course. But also in our case, you might even have a zero carbon mine, whereas the carbon emissions of our competitors in Indonesia are extremely high. They're very carbon intensive. In many cases, the power, and this huge power use, the power is provided by burning coal. In pure economics, we can beat an HPAL project. When you factor in environmental factors, we are more challenging, and that is the critical issue.
Let's go even deeper on that. So, I mean, what many companies are looking for is a supply chain that's as low carbon as possible, right? And I think I've seen that the average nickel mine produces something like 25 tons of CO2 for every ton of nickel that they get out of the ground. Your average is going to be a lot lower. How are you able to do that, first of all?
Well, for one thing, we're fortunate. We've got a hydro grid in Vancouver, in British Columbia. BC Hydro, has its power from dams and dropping water, and it's a historical benefit. But also, sulfide deposits seem to be less carbon intensive by their very nature. So we start off with relatively low carbon intensity thanks to the grid. If we also were to have a mining fleet of electric vehicles, which today they don't exist, but we can see that they're developing. 5 years from now, we probably will have a fleet. We will be able to get a fleet of electric vehicles. That will cut our carbon emissions as well. And then our tailings absorb CO2 from the atmosphere and lock it away in mineral form forever. It's called carbon sequestration. And you take silicate tailings, which we're building our tailings management facility to maximize the amount of beach that we've got. So these silicate sands have as much exposure to the atmosphere as possible. They absorb CO2 and convert to carbonate minerals, which are a very benign mineral. And the CO2 is locked away in mineral form for hundreds of millions of years. So it's very interesting, and you can measure it. So we're working with Professor Greg Dipple at the University of British Columbia to keep getting ever better at measuring it and figuring out how to maximize, our CO2 sequestration from our tailings. You put it all together, we've got a real shot at being a carbon neutral mine. We're not there yet. I'm not claiming that yet, but I am claiming that we have a real shot at it. Stay tuned.
Now, there's two kind of big markets for nickel, right? The traditional one, about 2/3, I think, of the market is for stainless steel. And then the newer market is for EV batteries. What would your nickel be used in? Could it be for either market?
Well, it could be for either market, but it is very suitable to take to the cathode. We make a nice, high-grade, very clean concentrate. What we're going to be studying with our next round of engineering studies is to add what's called a pressure oxidation circuit at the back end of our existing circuit that we're modeling. And this would take our concentrate and upgrade it to a product called mixed hydroxide precipitates, MHP for short. And MHP is it's an incredibly high demand right now from battery makers. You can take MHP downstream to cathode materials quite easily, and it's easily transportable. It's just got a lot of virtues going for it. It is the most in-demand form of nickel today. Now, the thing about a pressure oxidation circuit is you can use it to make MHP. You could also tweak it to make sulfate. You could tweak it to make almost anything, really. It's a very flexible technology. And so maybe 5 years from now, MHP won't be the hot item. Maybe it'll be another chemical form of nickel. We can adjust to that. So by adding the circuit, we're going to be able to supply whatever the customer wants. And that's, I think, going to be a real strength of our deposit of our project.
Okay, so I'm an investor in the company already, but I am a little bit confused because you just said it would take probably like $2 billion to get the mine fully operational. but you don't have $2 billion right now. Also, I heard before when we talked to you, you said it would probably take about 3 years if everything worked out well to get to that point. So we're talking years from now to get to the mining part. So why don't I just wait as an investor? Don't invest yet. Wait till you guys are shovel ready, digging the nickel out of the ground, then I'll invest.
Because then you'll miss all of the capital appreciation. I think the next stage is we're just entering into a very interesting stage. As a junior company on its own, there's no way we could build a $2 billion mine. But now we've got Mitsubishi, a major corporation, stepping in for a minority interest. Mitsubishi does many, many things. One of the things it does, there's a Mitsubishi bank, and this bank finances building mines. But we're also not going to stop with Mitsubishi. We're looking for more money, and we're looking at car manufacturers and at battery manufacturers, because they're the ones that are starting to realize that they're in trouble. If they want to be in the electric vehicle business 10 years from now, they better have a secure supply of critical materials, including nickel, lithium, and other things. So that whole supply chain concept is changing as we speak. I mean, we've gone from just-in-time inventories, worldwide supplies, and different suppliers, so that the manufacturers would create competition amongst their suppliers and drive prices lower. And that has worked extremely well until it doesn't work anymore. And it doesn't work because there's a war going on in Europe, and there's a bunch of saber rattling happening out of China vis-a-vis Taiwan. And people are starting to realize, well, okay, if China does invade Taiwan, or when they invade Taiwan, what's going to happen to my supply chain then? So there's a movement right now to get the supply chains closer to home, to have your supply chains coming from countries that are politically stable and aren't going to go to war over some imagined slight. And with critical materials, there's also a movement towards vertical integration, to actually owning part of the supply. So, I'll give you an example, Zach. I mean, there's a car company that we were talking to a year ago, and we had very excellent conversations, started digging into it. And at the end of it, we were saying, well, we need money. That's what this is all. We need money. We need you to give us money so we can build this mine. And they were saying, yeah, we don't have a mandate from management to actually invest in projects. And so, nice to meet you. Off we went in our different directions. Well, they came back about 3 months ago and said, we now have a mandate to invest in projects. So there's a really interesting change going on. They're gradually coming to this realization that if they don't figure out their supply chains, they're going to be in trouble. And part of it is they would prefer low carbon supply chains. And they would prefer supply chains closer to home, both for security and because you're saving on transportation costs. So, I think our next step is to sell another minority interest to a car manufacturer or to a battery manufacturer. And we've got a lot of interest. The market is coming to us. And I think once that piece gets put in place, it's going to be very interesting times, because we're now in a position where we can conceivably get this mine built without diluting our equity so much that the shareholders get wiped out. And that's really the puzzle that I'm trying to solve, because I'm the largest shareholder in the company, and I really don't want to get diluted to zero. So I'm motivated.
Now, the price of nickel is a huge factor here. And I think when we spoke last year, the price of nickel was already really good, and it made the project very attractive. But of course, you have to be focused on what the future price of nickel will be. Since we've last spoken, it's gone up. What are your thoughts about the future price of nickel? I mean, I guess us in this kind of, if you're watching the show now, you probably know that we're believers in EVs. And I think that if we keep going forward with EVs, we're going to need all the nickel we can get. But is there any other risk here? I mean, if we stopped making EVs, would that put the kibosh on the price of nickel?
Oh, I think it would, yes. I think if you stopped making EVs and everyone went, oh, this is nonsense, the emperor has no clothes, that dynamic and quickly growing new demand source for nickel would disappear. And yeah, the price of nickel would crater. We'd be out of business. So yay EVs. But given that the EV revolution is happening, and it seems to be happening faster than anybody had expected. I mean, if you go 3 or 4 years ago and look at people that were guessing about the rate of expansion of EVs, the ones on the crazy end, the ones that were insanely bullish, they weren't bullish enough, right? It's reality is beating everybody's expectations. And so it's come to that point today where the constraints on EVs aren't demand. The constraints are supplies of raw materials, and in particular, lithium and nickel. In the near term, there has been some headwinds, both for copper and nickel and other things, because of China's zero COVID policy. That zero COVID policy is disrupting markets worldwide. But, so the price of nickel is down from where it was a few months ago, and it is quite volatile. In the middle of all that, the EV revolution is continuing. And so this zero COVID policy will resolve itself one way or another. The population of China will either rise in bloody revolution, or they will end the zero COVID policy at some point. And I believe it'll be the latter. So, at some point, zero COVID in China will be in the rearview mirror. And I see it as a speed bump. But the longer term trend is towards more nickel needed for electric vehicles.
So we're speaking to a lot of disruptive investors right now, people who get it, that disruptive technologies are going to change things, and they probably buy into this whole argument that EVs are the future. But I know a lot of these investors are thinking, mining company, I don't know if I can pull the trigger on that. Like, we just talked to Ross Gerber from Gerber Kawasaki, and he was saying he's not a huge fan of mine companies too. And so what do you say to people like that who are basically just have this thing against mining companies?
Well, there's different things, against mining companies. Like, some people, a lot of environmentalists have a knee-jerk reaction against mining, but don't try and take their iPhone away from them, Don't try and take their electricity away from them. I mean, these materials have to come from somewhere. So I regard, environmentalists that are just knee-jerk anti-mining as hypocrites. Go ahead and be a hypocrite. Now, it is fair to examine the mining practices and compare, this is a relatively low-impact mine. This one over here is a huge impact and does tremendous damage. I mean, there are damaging mining practices in the world, and they are to be avoided. So, but another part of it is just simply a lack of familiarity. I mean, I think people that are, tech investors haven't spent the time in the mining business to really feel comfortable and to understand the business. And it does take some time. But I would just suggest to them, in our case, Mitsubishi investing in our project is a tremendous validation. They have the ability to tell the difference between good projects and bad projects. They've done the due diligence for you, in other words.
Investing in a mine is a long process. I think that a lot of tech investors want to see something next quarter. They want to see their stock go up. And from my experience, this is a long investment. But because it's a long investment, the leadership of the company is super important. You're going to have to thread a lot of needles to make this work. What can you say about you and your board that would give confidence to investors that you are the right team to do it?
Well, myself, I've been working on this since 2004. And what I liked about the project when I saw it then, and what I still like about it today, is that it is gigantic. I like big things in the mining business. And because it's gigantic, it gives leverage. So when you've got, and let me be completely transparent here, with nickel at the low end of the price range, This is not an economic deposit. And neither are any of the other undeveloped large deposits of the world. That's why they're undeveloped. But because the economics are marginal, as you move the price of the commodity higher, the depreciated net present value explodes. And so that's where the value proposition is for an investor, is you've got leverage. You've got, it's like buying an option in nickel. So you could see an explosion of value here if nickel goes crazy. And I think nickel, it went crazy briefly during a short squeeze. That was a taste, I think, of what is to come. What happens in the mining business, and I've been an investor in the mining business for a long time, is you say, okay, here's a good price point, I'm going to take my position. And then usually nothing happens. Nothing. And then something happens out of the blue and everything explodes. And it's too late to chase it. So if you had your position, now you're enjoying the ride. If you don't have a position, you're going, okay, well, this is active now, but am I paying too much for it? I don't know what to do. So, that's the nature of the beast. Nothing, and then everything happens all at once. And I think this next year for us is going to be incredibly eventful.
Yeah, it does seem like, as you mentioned, auto manufacturers are they're slowly waking up to the fact that they have to make deals now to lock in supplies, because as I think you mentioned, all current production is already spoken for. I think car manufacturers kind of thought, well, there's always going to be some material somewhere, but no, it's being bought up immediately. So now they're going, oh, wow, we do have to buy into future production. And I feel like, yeah, if you haven't already, and you probably can't tell us, but if you haven't already, it seems like there's got to be some deals on the, coming up soon.
Well, there's a lot of conversations underway right now. And I can tell you that the conversations are increasing as a result of the Mitsubishi investment. I mean, here's the thing is, we've talked to most of the car companies at this point at one time or another. I have yet to meet a mining engineer. So, the car companies, none of them that I know of, have mining engineers in-house to help them evaluate one project from another. Other kinds of engineers don't matter, because you can be a chemical engineer, you can be an electrical, you can be an engineer that designs, building cars. But the mining business is very different. It's a manufacturing process where you've got different inputs coming at you every day, because ore bodies are not homogeneous. I mean, our ore body is incredibly homogeneous for a mining deposit, but it's not homogeneous. So you've got to adapt your manufacturing scheme to what's coming at you that day, which is unlike, car manufacturing. There, what your inputs are, and you just design it and go. I know that Tesla, for example, is trying to hire mining engineers. Maybe they have by now, and metallurgists and people that understand mining. I think the car companies, if they're going to be well supplied in future, are going to need to have that in-house talent. They're going to need to be able to differentiate between projects. But again, in our case, we're dealing with Mitsubishi, which has in-house engineers and so forth, and everybody knows that they're sophisticated about the mining business. So it's sent a signal now to the car manufacturers and the battery manufacturers that of all the projects in the world, this is one you should be taken seriously.
People who want to learn more about Giga Metals, where should they go? And tell us what exchange you're on and your ticker symbol.
We're on the TSX Venture Exchange. The symbol is GIGA. We're also on the OTCQX symbol HNCKF. Yeah, it's pretty easy to buy and sell the stock.
Mark, thank you so much for hanging out with us today and giving us all that information, especially answering some of my dumb questions about mining. It really does help, I think, investors who aren't, experts in this space to understand it a little bit better.
Yeah, well, I don't find the questions dumb at all, Zach. They're good questions. Thank you very much for your time.